This is Ryan Wheeler with United Residential Mortgage, and I'm here today to talk about why you don't need 20% down to buy a home. So, I know it probably seems like you've been trying for years to save enough money for a down payment for a home. You're cutting corners, bringing your lunch, stop buying the coffees at Starbucks, and you probably just see home prices continue to rise, and your dream of home ownership kind of seems out of reach. Well, guess what? Maybe you're a little closer to owning a home than what you think, because with many loan programs, you don't need a 20% down payment to purchase a home. So no matter how much you may have saved, there's probably a mortgage program that can help you right now get into a home. So let's take a look at a few options, and we're going to begin with the FHA loan. So the FHA loan, for example, stands for the Federal Housing Administration. It's backed by the Department of HUD, Housing and Urban Development. It's a 3.5% down payment. It is a phenomenal program, lots of flexibility. Contrary to popular belief, you do not have to be a first-time home buyer. There are no income limits. There are no area eligibility limits. It's very flexible with credit scores. Although it does go below a 620, we highly recommend getting your score to a 620 for this program. It's going to save you thousands of dollars and lots of headaches during the process. But it's also flexible with your debt to income ratio. So the FHA program is an incredible program, and we use it for an enormous percentage of our clients. It does come with what's called PMI or MIP, mortgage insurance premium, on a monthly basis, but that was just recently cut about 30%, almost in half. So the interest rates are fixed rates. They're very affordable. And it is probably some of the better market interest rates for the current market. So it's an incredible program that we highly recommend that you take advantage of. And we'll move on to the next program, which is conventional. So conventional is backed by Fannie Mae and Freddie Mac. These programs, Fannie Mae has a program called Home Ready. Freddie Mac has one called Home Possible. They both have 3% down payment requirements, 3% down. They do have some income limitations on these programs. You'll have to look for your area, but in this area, for example, might be around 78,000 in that neighborhood. So conventional also has another program if you're over that income limit that allows for 3% down. It's just a conventional 3% down program, but you do have to be a first-time home buyer for that one. So the other ones, you don't have to be a first-time home buyer, but you have to be an income limit. That particular one, you just need to be a first-time home buyer. If you are over the income and you're not a first-time home buyer, then the only option really for the conventional program is going to be a 5% down payment option. So all of those great options. And again, for all these programs, for all those down payments, you can use gift funds from your relative, family relative. You can also use your 401k and other means like that. You can't borrow money to use for the down payment. It has to come from your own funds, but those can be gift funds from a relative or 401k, some sort of, backed asset like that. So the next program we're going to talk about is the USDA. It is a true no money down program, 100% financing. It's a great program, but there are some area eligibility limitations. You can search that. There's a place online that you can search the address to see. In the Hardin County area, most of E-Town and surrounding areas will qualify, but Radcliffe does not. Radcliffe up to Louisville basically don't qualify for USDA. USDA is a little stricter on credit scores, on getting those approved, is a little stricter on debt to income ratio too. And I think it's just because it's a 100% financing program. They've tightened up on other areas of that program. So it is still a really good program, no money down. And we'll look into all these options for you when we do mortgage consultations to see what the best program is for you and your situation. So the next program, probably the best in the marketplace, is the VA program. You do have to be a veteran to have access and eligibility to do the VA program, but it's 100% financing, no PMI, the best interest rates in the market. So you're going to get the best payment, best rate, best everything with the VA loan program, and you can do 100% financing. So it's an incredible option, and it's very flexible with credit, debt to income ratio. The guidelines are extraordinarily flexible, just like FHA. So phenomenal program. The next option is something that we use as a last resort, and this is down payment assistance. We got down payment assistance through the Kentucky Housing Corporation. I don't normally recommend going that route if you can do the down payment, just because the rate, we have to do the loan through them as well. The interest rates are higher, the payments are higher. So everything's going to be a lot more. There's going to be more cost involved, more cost, higher rates, higher payments if you do the down payment assistance. It does save you the down payment, but you're going to pay for it substantially. So we do have that option as a last resort for somebody who is looking for, a no down payment option. But these low down payment options are great alternatives to that, and we highly recommend those. So, but outside of that, I hope you found this information helpful. Please reach out to me with any questions whatsoever. But as you see, no matter where you're at right now in your home buying journey, you don't need 20% down. And I don't recommend waiting to save for 20% down. I know that having 20% down, the benefit of that is on a conventional loan is eliminating the PMI. And that's a good thing, and that's nice to have. But if you wait several years to save up that 20% to get rid of the PMI, you'll actually have lost more money by home appreciating year over year. Let's just say 5%. So 5% year over year price growth is going to outpace what it takes, the savings that you're going to get from saving 20% for the PMI. I'll dive into that in another video, but just kind of wanted to touch on that as well. Hope you found this helpful. Thanks a lot, guys. Check out the next one. And if you need to get in contact with me, check out all the information below. Feel free to call or text me at 270-228-0075, or go to our website, unitedresidential.net, or just book a consultation with me. You can schedule with Ryan.com. Thanks a lot. Take care. See you on the next one. Bye.